G'day Alan, welcome back to the Roundup Report.
Pleasure to be here.
Alan, last month Rob Brooker was in the chair and we got some great questions from some of our viewers, including this one from Sally from WA, who asks, have the banks tightened their lending criteria, which is contributing to the flat residential property market?
I think the short answer to that is no. What's really happened is consumers are basically feeling scared and they're starting to worry about is now a great time to essentially go and put all your eggs in one basket. So what's happening is the banks are actually trying to lend for housing, but there is a shortage of supply out there, and the banks are reluctant to sort of lend to property developers. So that's in some ways underpinning the market.
Interest rates left on hold for April. No surprises there?
Not really. I think everybody was expecting it to be unchanged. What the Reserve Bank is saying is, look, the world's still looking better. We've got some natural disasters that we have to go through. They're going to increase inflation. They're going to cause temporary disruption in the economy. Once we get on the other side, we'll see what happens. Our view would be that when they get the other side of these things, the economy is going to be accelerating and they'll still need to increase rates.
The interest rates discussion leads to David Hadley's question, who asks whether inflation might be better contained via other tools such as GST rather than the RBA increasing or decreasing interest rates. Your thoughts?
Well, you can always help monetary policy by having fiscal policy tightening at the same stage. But at the end of the day, changing the GST is not going to change anything. Consumers' inflation is basically just a measure of the basket of goods that you've got. So if you've got things like natural disasters that wipe out banana crops or oil prices going up, inflation's going up.
The Aussie dollar continues its surge, and Michael Euthyrium would like to know, where do you see it settling?
That's difficult. I mean, our forecasts are that we would expect by a couple of months' time around 105. Today it's around 104. I think at the end of the day, what the currency is really being driven by is views about China and global growth. If you believe the Australian economy is doing well, if the world economy is doing well, people continue to basically invest into Australia. I was in New York, they were talking about 110. I think that's probably too much, but broadly, the world looks better, Australian dollar's going up.
Sticking with the global theme, the events of Japan. What are the impacts for Australia?
Well, Japan is clearly a human tragedy. If you can sort of look beyond that, I think the number one issue is nuclear reactor. Let's assume it can be put on the one side and doesn't really get much worse. When you look forward, Japan will rebuild. They're really going to continue and get growth as they go forward. And that's going to increase demand for commodity prices, particularly coal and LNG. I think net in the medium term is probably positive for Australia.
The carbon tax continues to make headlines. What do you see as the impact for food and electricity prices going forward?
Look, the long and short of the carbon tax is no one's announced the price and no one said who's included or excluded. So until you get that, you really don't know. But from a fundamental point of view, if the carbon tax is actually going to change behaviours, it's going to change prices, and it's going to change prices on the way up. So I think ultimately it is going to have an impact that's going to be negative, but until you tell me what the dynamics are of how they're structuring it, I don't know, and neither does anybody else.
Alan, a couple of months on from Australia's own natural disasters, what's been the impact?
The impact in the short term is actually more negative than what people thought. In particular, you're seeing a large delay in production of coal. So they can't pump, if you like, the water out because it's toxic. They can't put it in the dams. And that's having a more negative impact than what most people thought. So we would expect the other side of the floods, which is the June quarter, the economy is going to be growing in excess of 1% per quarter. And RBA will look at that and say, that's too strong, we need to basically increase rates, and we expect 50 basis points by the end of the year.
Alan, thanks for being a part of the April Roundup Report. See you soon.